The Indian markets got a huge fillip in the last week based on the RBI actions with the timely rate cut probably coming through. The markets reacted the way they did. And again, I think it was followed day before yesterday with the ECB stimulus. The 1.1 trillion euro stimulus that was probably announced, which will start in March till September 2016, has given the impetus to the markets with the rally that you've seen, the NIFTY and SENSEX both hitting lifetime highs. Having said that, probably triggers for the market in the coming week will be what happens with Greece and the related outcome if Greece actually opts out of the Eurozone. So I think risk on, risk off in the markets might continue. The volatility would be very interesting to see in the coming week. Coupled with that, I think the expiry is around the corner and huge bouts of volatility are probably expected. Now I think if the Greece event turns out the way it is, I think there might be some amount of declines into the global markets as a temporary phenomena. But going forward, I think the larger picture will be what probably happens in the budget. Our opinion is that probably, apart from the statistical importance of whether the FM achieves the fiscal target of 4.1, the roadmap that he probably lays will be far more important. The reform processes that the government has probably announced to ordinances, the follow-up on that, further reform process expected in a lot of sectors, including power and infrastructure, how he probably intends to kick-start the capex cycle and the investment cycle in general. Those are the important points probably the market would like to see. And the implementation of GST from April 1st, 2016 is an important facet, and the run-up to that in terms of preparation. So I think if all this is probably delivered into the budget, I think the markets will take it very, very positively. And I think structurally, the markets are placed in a sweet spot. Though from a valuation perspective at 16.5 times, we are probably at our peak valuations as far as historical comparisons are gone. But compared to the emerging space at the current moment, I think we are in a very, very sweet spot. Having said that, probably I think banks, financials have done extremely well, as we had discussed a few weeks back. Autos have done extremely well. Cement companies have done exceedingly well. Our take is that probably with the structural rate cycle probably taking place, these sectors will benefit humongously going forward as well. So I think stock-specific approach still in the markets. I think investors who probably not participated in the rally should use this opportunity and every decline over the next few months to participate in the rally. So happy investing and have a great week and a month.